This week, the indices barely moved. However, my performance has been quite strong. While the S&P and Nasdaq chopped, my system was able to find a few opportunities that I was able to trade breakouts, reversals, but also it's exposed me to some weaknesses in my strategy. This episode is a full breakdown, the wins, the mistakes, the setups, and the three assets I'm hunting next week. Let's get right into it. This week was a classic December week. We had a slow grind up higher. We predominantly had a bit of we mainly had a chop in the market where we had a dip and then a buy up in the later part of the week, and then on Friday we sold off a little bit, as you can see here in on this S&P chart. The Nasdaq also looked fairly strong. We had the Nasdaq moving and grinding a little bit higher here. However, in the latter part of the week, again, we found some resistance on the Thursday and the Friday. The Russell 2000 was fairly strong and it continues to move higher with some resistance on the Friday. Like all the markets, I think this is some fears of the interest rate decision on Wednesday, the 10th of December. And I think it's a normal dip if we do get a dip here. Overall, the volatility was fairly good. So we had a further downside move on the VIX, showing that we're going from extreme fear to fear and hopefully to neutral with an inclination to go towards some optimism and greed as well. Ideally, that would take the VIX to around 13 and take the S&P 500 to around 7,200 in the next couple of weeks. That would be the ideal. Now, one of the reasons why we've had this move is the Dixie breakage structure, which I've covered in my daily show, where I've mentioned it a few times that if the Dixie breaks structure, then we're likely to see some bullish momentum in crypto and risk assets. That's exactly what's happened. We saw a break around the 99.5 level of this trend line, and then since then we've seen a nice move downwards. I'm looking at the 98.5 level as a key support, and then we'll see what happens there if we get further downside momentum. Bond yields have stayed fairly stable, and that's also given traders more inclination to go into risk on assets. And then we have the optimism of a interest rate reduction, which has also given us some more opportunities. With that being said, S&P 500 and the Nasdaq haven't performed extremely well, but I've managed to outperform them considerably this week. Right, so let's get into my P&L for the week, and I'm going to quickly share my brokerage account with you guys. It's been a good week. We've had, I've gained around 5.13%, while the S&P 500 has only produced I think the S&P has only produced 0.31%. The Nasdaq only 1.03%. So a 5-time outperformance of the S&P and the Nasdaq here. So I outperformed both with a wide margin, and not because the market helped me, clearly, but because I picked great individual stocks and names to trade. What went right was I traded a couple good names, and I'll cover that right now. So here's what went right. We had TMC, my best performing trade for this week, a CTR of 2.77%. This was the one that gave me a considerable amount of profit around Tuesday, Wednesday, and Thursday. It was the strongest contributor to my portfolio this week. Also, Tesla giving me around 1% gains here for this week. This was a clean structure, good setup, strong follow through as well. I felt quite comfortable holding Tesla during this situation. And we're a little bit early, but with the potential of a further move upside with some positive news next week. PPC, Pilgrims, and STZ have done quite well as well. No major gains, low drama, but high clarity trades. They're coming off the bottoms and they looked pretty strong to me, and that's the reason why I traded them. I've also had some gains from holding the Great British Pound. I've had around 0.45% gains there, just quietly gaining because of my exposure to the pound. This tends to balance out overall, but this year and last year I've gained quite a lot on holding the British pound as the dollar has lost its value. I gained approximately around 10% throughout the year because the US dollar lost around 10% of its value compared to the British pound. So what went wrong? We have Starbucks here. I've had to hold through. I entered a little bit early with Starbucks and it's been a bit of a slow mover, losing around 0.22 on this one. Precious metals, we have WPM. Even though I'm in profit overall because we've gained last week with WPM, this week underperformed and seen some of those profits being given back. With AEM, another precious metal play, which I traded on the Friday, expecting that gold might move well on Friday. Again, hasn't broken out properly, and this is another reason why I'm losing out on this. I will be showing you guys the charts really quickly after this. But as you can see here, BKR losing some of my gains there as well. I'm in profit with BKR, and SPGI is the only actualized loss in this bottom performers. Okay, so it hit my stop loss within the day. I was quite tight on that stop loss as well because I was looking for a high risk reward ratio. I wanted it was approximately a 1 to 10, 1 to 7 on that one, and I lost around 0.45%, which is okay. It's part of the game. I was looking to gain around 2 to 3% on that one if it played out correctly. Now, I want to cover also risk metrics. So I'm going to quickly give you a summary of my risk metrics. I took a screenshot earlier, and I think it's maybe better here because I can kind of make some annotations while we're going through this. So we have, I'm not going to cover everything here. Risk metrics, the main ones I want to cover are Sharpe ratio, which is right here, right? Sharpe ratio, as you can see here, a staggering 9.42 on the Sharpe ratio, as opposed to 7.4 on the Nasdaq and 2.5 with the S&P 500. Okay, so very good Sharpe ratio there, showing that I am outperforming and managing risk effectively, or risk adjusted performance is much better. That'll be the technical term. Drawdown was around 1%, so although it was lower than the S&P and the Nasdaq, drawdown was managed effectively, in my opinion. 1% drawdown within the week is fairly strong to me and quite stable. I'm happy to take 1 or 2, even up to 5% drawdown within a week if I have to get some gains. Positive alpha as well. So we have, I think the alpha is right here. Yep. So positive alpha of around 2.2. Okay. So again, performing quite well here, beating both the S&P and the Nasdaq. I think this tells you everything. It wasn't just luck. It wasn't just me riding the wave of the overall market. It was controlled risk with asymmetric rewards. Okay, this is the key. Controlled risk with asymmetric rewards. This is the reason why I outperform the markets by 3 to 5 times every year. The whole point of my strategy, the whole point of the Trend Hunters community, the whole point of me posting these videos is to educate you guys and show you that you can control risk in such a way that you can achieve asymmetrical returns and outperform the markets consistently. Okay, that's the reason why I've created the community, and I think this is a good time for me to share with you guys where you can go and join the community. You can go and click on the link below in the description of this video to join my Trend Hunters community. Join the novice hunters, which are the beginner traders, the beginner level of the group, where you get to see my macro market conditions every day. I provide you guys with insights on what I think the markets are going to be doing. These are all the markets, including gold, including forex, including crypto and equities, as well as other commodities when I see other commodities are doing well. Sector rotations, I talk about the macros there. I cover a lot of analysis, which I think will help guide you guys to just have an additional edge. And then you can also see my watch list every day for stocks and cryptos. And this isn't just a general watch list where I have a scanner and it produces 200 and I just share them with you. This is my hand-picked watch list for the day. It'll be 2 one day. It can be 10 on another day. It can be 1 on a day. Okay. And sometimes I don't get any. So it's very, very selective information, high value, and it's only £15 a month. So go and join that community. Check it out. And if you want to join the other levels of community, the apprentice hunters or the master hunters, where you get to see all of my trades with complete transparency, be able to copy and take the same trades yourself, as well as learn my strategy, you can join any of those communities by contacting me within the Discord group. Okay, so let's get back into this video where I'm covering my weekly performance. So look, the standout trade of the week, TMC. And I'm going to run through now why TMC is the standout trade. Okay, so we had a nice pickup in volume on the 25th of November last week, a dip. This is where I was picking my entry point. And for me, it was a dip and then looking to buy into a continuation on the momentum with the hope that we go up to $9 or even just retest this $8 level, which we have done. So I end up trading within this range on the lower time frames, and I achieved around a 1 to 10 risk reward here. I sold some around this level, and then I've held the rest for further momentum here for more of a swing trade, a medium-term trade. As you can see here on the on the Friday, we had a dip with TMC because we were much better. We were around 7% gains for the week, and then we also had a bit of a drop off in the overall market with Hood as well, dropping off a little bit. But overall, very good performance. Very happy with the performance so far, and hopefully TMC continues to hold through here and then continue next week. If not, I take my profit and we look for another trade. We look for another opportunity. But very nice compression. We had a multiple time frame alignment here, like I mentioned, with the daily being confirmed and then me looking for the lower time frames for the entry. We had volume from the institutions, and we had a break out of structure on the lower time frames as well. Okay, so yeah, very nice risk reward there. I managed risk correctly. I sold some off as well, and I'm looking now to ride the trend if we can get a considerable trend for the next couple days and weeks. The lesson I learned here is A+ trades make your month. Okay, So last week we had about 2.5% gains. This week around 5%. And if we could keep going like this, maybe it becomes a 10% month. I'm looking mainly for around a 5 to 6% month to be able to double my account at the end of the year. Okay, that's compounded, cumulative gains, and yeah, it's what I'm looking for myself. My mistake this week was, I would say, holding through some names. Actually, I'd say it's SPGI, which I think I was a bit too tight on the stop loss. Okay, I think that's a big mistake because it meant that the stop loss was hit almost immediately within the day. The way that I looked at this was I could put the stop loss on the daily lows on the 4th. I traded the 5th, or I could put it on the low of the actual day that we opened, and I felt like we could go into some momentum here. And then unfortunately that didn't follow through, and then we came back down and had this stop loss hit. What I will say is I should have, on hindsight, left it on the low of the day because of this nice compression and price action tightening. But also, I shouldn't have taken the trade. So the real entry point would have been above 502, which it never really went, 502, 503. It never really went above that level. I took it a bit too early on the lower time frames. I was too eager because I liked the setup, and I thought maybe if we get a 1 day, we could go straight into profit and then be able to ride this later next week. A bit too quick, too rushed, not enough patience here on this one, and too tight on the stop loss. So a number of mistakes here. The setup is perfect. It's still very, very nice, and I might be taking this next week. So it could be one of the ideas I'll be sharing for next week as well, okay? But it's very, very nice. It's set up quite well, and I like the tightening, and I think we can get nice momentum here. That's the main reason I want. That's the main mistakes I want to cover for this one. For next week, I will say we have that situation where we have interest rates that we have to monitor, first of all, the impact of interest rates. We have other economic data coming out. The market is looking quite confident of an interest rate drop next week. That's a positive. In terms of structure, I'm being very careful with what I'm buying and how I'm managing these trades. As you can tell, managing risk is the key to our performance, and then looking at risk-adjusted profits as well. What I am watching mainly are quantum stocks, even though they've been red in the last day or so. I think they've built up some momentum. I'm looking at S&P Global. I am looking at nuclear plays again because they've had a dip after the rise. So we have quantum, we have Oklo, we have Big Bear AI here as well, which I would like to rebuy, and we have SMR. Okay, so there's this big chunk here of opportunities that I see in the markets. I also like the momentum that I saw in the Chinese market with Alibaba. So that's something I'm monitoring, and I'm quite confident that I'll be able to get another trend with Alibaba. We've been able to trade it twice this year and make some nice profits. That will obviously be covered in the yearly review videos and the monthly review videos that I do on my performance. In terms of commodities, gold is looking quite strong, and the dip will probably be bought up. And I also like US oil, which I think could see a nice breakout in next week. If it's going to happen, it will happen next week or within the next 10 days. And we've seen some early momentum here for that move all the way up to 61. And what I think will be the ideal move is all the way up to 68, which will be a nice risk reward ratio on this one, around 1 to 4, 1 to 5, depending on where you put the stop loss. Very, very nice setup in terms of commodities. With currencies, I'm looking at the dollar support zone of a 98 on the Dixie, and then I'll be able to maneuver within whether the dollar finds support and moves higher. Then we'll be able to short currencies like the euro and the pound. But I don't trade currencies often, so that's what I'm looking for anyway. Bond yields as well, very, very important. It's a 10-year bond yield. So the US 10Y has an inverted head and shoulders, which I've covered in the daily videos for a number of weeks now. And I feel like we're on the verge of a breakout here, as you guys can see, for that push back to 4.3, which could drag the risk on market. This includes cryptos, and that's the reason why I haven't mentioned cryptos here. I think it's too risky for us to be in crypto right now. The plays have been these stocks, these names where you can get some nice risk reward ratios, like TMC, Tesla. Robinhood was fairly good as well before it sold off on Friday. And it's really a picker's market. It's a stock picker's market. It's a trader that can rotate between sectors and ideas, and is quite nimble and fast with his decision making that will profit in this type of market. At the moment, it's very, very risky. We are all-time highs or around the all-time highs with the Nasdaq and the S&P 500. Crypto, on the other hand, has been completely crushed, and I'm waiting for a accumulation zone. I'm waiting for crypto to be accumulated around this 80 something, 90 something level like it is right now. We have 2 days up, a couple of days down. We have 4 days up, 4 days down. There is no clear trend being developed here. It's a accumulation. It's a zone where we could get further dips all the way down to the 84 level, or we could accumulate around this level here for that move to 101 and 107. So very risky, and I'm not trading them at the moment. But maybe next week we might get some nice momentum and a follow through in some crypto plays in the stock market as well, like MicroStrategy, Coinbase. There's BMNR and a few other ones that I've been monitoring for a while. That covers next week. But I will say this: if you want ideas every day, there'll be new ideas every day and analysis on the markets, subscribe to the channel and watch my daily updates. There's a daily 10-15 minute video where I analyze the current market conditions and I give you guys what I'm looking at for that particular day. If you want to stay ahead of the markets instead of reacting to it, subscribe to the channel, like I mentioned. Join the TrendHunters community by clicking the link in the description of this video and join the Discord group. It's only £15 a month. You can try it out for a month or two and see if you get value for your money. I guarantee you're going to get more value than you think. It is underpriced for the real value that you get with the watch lists and ideas and analysis that I provide there every day. And I will say this: I'll see you tomorrow on the daily hunt. Monday opens fast. Stay sharp and stay one step ahead.